Now let's look at other macros. The rupee is at an 11-month high, and on a year-on-year basis, it has actually appreciated by 0.2%. Now the government also plans to raise a part of its gross borrowing in foreign markets through the issue of a sovereign bond, which will mean more dollars coming in. 10 billion is the initial estimate from the DEA secretary. This could strengthen the rupee even more in the coming months. Can all this hurt the economy, and should the RBI look at active currency management to ensure some depreciation? In the first place, can it? To discuss all this, we are joined by Ajay Sahai, Director General and CEO of FIO, to tell us how exporters are faring, Sajid Chinoy, Chief India Economist at JP Morgan, and Pradeep Khanna, Managing Director and Head of FX Trading at HSBC India. Well, first to you, Pradeep, to lay the ground. How was the rupee faring vis-a-vis a lot of other EM and Asian currencies? Are we on the forefront in terms of appreciation?
Hi Lata. Yeah, I think the rupee is a relatively good performer this year. Having said that, I don't think the degree of outperformance is huge or eyebrow raising. So I would just tend to think that it's within the ballpark of how currencies normally do move, and we're on the stronger side.
Okay. Sajid, I just wanted to come to you on that. Do you worry about the rupee strengthening even more, going by the things laid out like sovereign bond issuance?
Well, I think one theme that this year is going to be that the balance of payments could be in a meaningful surplus for a couple of reasons. If oil is going to be at $65 a barrel and growth is not particularly strong, the current account should print around 2% of GDP. And one clear theme in the budget was to attract more foreign savings, whether it's FDI or FPIs, and then you've got the sovereign bond. And remember, if the Fed turns dovish, you will see a lot of capital flow towards emerging market assets. So all told, the capital account could be very healthy, and the BOP could be in a meaningful surplus. The reason I worry is a couple of fold. One is, if you just step back over the last 3-4 years, what you see since the middle of 2014, the trade-weighted real effective exchange rate has appreciated 15%. So there are concerns here of some overvaluation. And that's manifested in the fact that if you look at the current account and strip oil and gold away, we run a surplus, but that surplus has been deteriorating over the last 3-4 years, which again is a telltale sign that we're struggling to compete internationally. The second is particularly against the CNY. If you look at the last couple of months, the CNY is down about 2%. The rupee has appreciated about 1.5%. So vis-a-vis the CNY, we're stronger by 3.5%. This is going to be a source of concern because remember, China is our biggest source of bilateral trade deficits. And if there are going to be trade wars with China, there's a lot of excess capacity there, and they'll be looking to other markets to export that too, and we don't want to make that too cheap. Let me end by saying, however, the RBI is intervening aggressively. Our sense is they've bought between $10 and $12 billion in the last few weeks. It is all being sterilized in the forward market, so you can't see it in liquidity. And on the INR CNY, if you go back the last 2 or 3 years, 2 years, 10 rupees to a CNY seems to be a line in the sand. So let's hope we don't appreciate much beyond that.
That's an interesting point you make, Sajid. In fact, if we pull up that plate once again, the rupee is the only emerging market currency this year, I think, apart from the Brazilian real, that has appreciated. Almost all emerging market currencies have depreciated.
The next list also has Filipino and Indonesian.
Okay, but it is one of the few that have appreciated compared to the rest of the lot. But Ajay Sahai is also joining us. Ajay, hi, good morning. What are the exporters saying? Is there a bit of concern with respect to the way the rupee is strengthening and the fact that it could strengthen some more if this foreign currency bond is issued?
No, in fact, definitely it is a cause of concern. It is not only the rupee is appreciating. On the contrary, many of our competitors' currencies is depreciating. If you look into roughly from October 2018, where rupee peaked to 74.33, it is now around 68.5. So it's a drop of close to 9%. On the contrary, if you look into Chinese currency, it depreciated by around 7%. So in a way, China is paying very consciously to see to what extent they can reduce the impact of the tariff war on them. In fact, they have managed well when the US tariff was 10%, but now with 25% tariff, they are in a little difficult situation, and that's why much of the business inquiry is coming to India. But let me also say that its impact will vary on sector. In the sunrise sectors of exports, which have a little more import intensity, the impact will not be much. But we are definitely worried about the labor-intensive sector, which hardly have any import content, because if you're talking about the petroleum, gems and jewelry, chemicals, they have very huge import content into that, and that's why they have a kind of natural hedging against currency movement. But definitely we are worried about the traditional sectors of the exports, particularly at a time when we are looking into the huge possibility of increasing our trade and even the investment from many of the countries.
Okay. Do you notice more competition from countries like Bangladesh and Vietnam? I mean, the conversation is that some American companies are pulling out of China because of the trade war and diversifying. They're going into Vietnam, Bangladesh. Now, both these currencies have depreciated. We also compete with them on textiles. Mr. Sahai, is the currency worry adding to our inability to compete?
No, I won't say that, because the investment which may be coming from China or from the US is not exclusively being targeted for the export production from India. They are definitely looking into the Indian markets also. There are a number of inquiries which have come particularly from the US and India, and they are looking into huge volumes also. So that provides enough opportunity for Indian companies also to look in. It is not that everything will come through the FDI routes only. There are other options also available. I'm not so much worried about Bangladesh or Vietnam, because in those country you hardly have such a huge market. Whosoever comes to India will be definitely looking into the Indian market also, and that's a plus point for us. But definitely if you are looking into only from the export perspective, the currency definitely give a little edge to these countries. But I'm pretty sure that there are lots and ifs and buts how Rupee will behave, because you are talking about $10 billion bond. I'm not sure how much of the NRI deposit which are likely to mature at the end of this fiscal will be rolled back, how much will be taken out, what will be the Fed rate, whether the difference between the Indian interest rate and the US interest rate will further be bridged. So all these issues needs to be looked into. But a short point which we are making is that we are not only concerned with the Rupee movement, we are concerned how our competitor currencies performing, and over that we hardly have any control.
Okay, well, if you look at the export data in 2019, exports in the month of May have picked up to almost $30 billion versus $26 billion that you had in April. March, of course, was 32, but on an average, there's been a bit of a pickup that we've seen. Just look at that graph. Sajid, I want to come to you on that, but before that, Pradeep, your thoughts on which way the Rupee could head in the very near term? I mean, say over the next 1 to 2 months, what are you forecasting?
Hi, I think broadly our scenario is for a relatively stable Rupee. I think there is at this point in time a little bit of a bias towards appreciation of the currency, and that is, I think as Sajid was making the point, the budget does seem to want to tap all kinds of foreign money, and as you said, there is a sovereign bond issuance as well. If there are some NCLT cases which have dragged for a while which get resolved, we could see some money coming from there. All said and done, while the Fed is cutting, it still looks like the US economy is doing far better than a lot of other economies in the world. So whether that would on its own, in economic terms really play out, for dollar weakness, I'm not so sure. It's just that there is also a political overtone over this. What was once upon a time considered quite acceptable, that if you had negative interest rates, your currency weakened as a byproduct, is now not being considered all that acceptable, because you have, the US president putting it constantly into the headlines that, this is a tactic which is used to get an advantage through a weaker currency. So to that extent, it's not only economic, it's a little bit political. And with that, I think the dollar will perhaps trade a little bit soft for the moment.
Okay.
And with the flows that could come in, we think there is a little bit of a bias for Rupee appreciation.
Okay, but very quickly, Pradeep, do you think this sovereign bond issuance will cannibalize the money that is anyway coming through FPIs into Rupee-denominated G-SECs, or will they altogether a different source of money?
Lata, it is anyone's guess. There could always be a portion which is cannibalized. I mean, for example, if depending on the rate at which the dollar sovereign bond issuance goes through, it's quite possible that a hedged rupee return could be higher than the current level at which a similar, let's say, 10-year benchmark government debt is trading. You could always have some investors who would like to swap into INR and sell part of their current holding just as a replacement. But equally, I would think that there would be a substantial portion which would attract a fresh investor base who would be quite happy at the maiden sovereign bond issuance and would like to hold it as a dollar holding.
Okay, Sajid, what's your sense of the year-end rupee level? I know there are too many moving parts. And because the Reserve Bank anyway wants liquidity surplus in the system, do you think that they have the elbow room to buy dollars at this juncture?
I think the RBI will look closely at more than a rupee dollar rate, look at two variables. One is the real effective exchange rate, and you've seen from the start of the year, that's only appreciated about 1%. So there seems to be a concerted effort to ensure that the 36-country trade-weighted RER does not appreciate. The second, I think, is to look at the bilateral INR CNY, because that's the source of greatest pressure. In terms of elbow room, I think there is a lot of elbow room here. You've seen the RBI intervene aggressively. Now, you can sterilize this in two ways. One is by buying forwards, which is what the RBI has done the last couple of months. The other way is to create rupee liquidity, because those needs will arise. That's a little bit more complicated, because then you're still making a guess about how much currency in circulation will go up later in the year. If it doesn't go up enough, and you don't want the interbank surplus to get too large, then you have to do OMO sales. So a cleaner way, I think, of sterilizing it, as the RBI is discovering, is to do it in the forward market. Of course, that pushes up the forward premium and creates other kinds of distortions. But remember, this is the old-fashioned trilemma. If India wants to have some control over the exchange rate with a relatively open capital account, something will have to give.
Yeah, the bigger problem is we tend to think of an appreciating currency as hurting exports. It actually hurts importers much more, because imported goods become cheap. Are you seeing that, Mr. Sahai, that domestic guys have had to compete with cheaper imports?
No, in fact, that's why I'm saying that if you're looking into the export, one part is that imports for exports become cheaper, and to that extent, the exporter will also get benefited. I'm more worried on the domestic manufacturing also, because if the rupee, let us say, appreciate by 6 to 7%, the tariff which has been increased by 5% is to some extent nullified also. So when you are talking about the rupee appreciation, I think if you're looking into economy as a whole, it's good for the economy. But if you're looking into the segment like inward FDI, if you're looking into the export, if you are looking into the remittances into the country, if you're looking into the impact of the domestic manufacturing also, I think that presents a different picture. So we have to be a little careful on that, and that's why we feel that if rupee move within a band, I'm not talking about managing the currency, but if rupee moves within a band and there is not huge volatility in the currency, I think that's benefit the economy, that benefits the exporter also.
All right, we'll leave it at that. That's a measured explanation of how things might pan out. Stable rupee is what Pradeep Khanna is expecting, but Sajid and Ajay Sahai warning that a stronger rupee would mean pressure for the domestic markets, which have to contend with cheaper imports.